Here we have the current stock market update for GameStop Corporation, stock ticker GME. Before we begin, if you find this educational material to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comment section below so that other traders will be able to find this information more easily on the platform. So here we have the 2-hour price chart. And as we can see here, the share price itself did manage to post a fairly strong price movement in the upward direction into the final parts of the trading week. This is a positive for the stock, given the fact that, well, there are a couple of factors here going on. So one, we can point to the fact that the share prices were able to move above the exponential moving average cluster. So that would be all four major moving averages on the 1-hour price chart. And then in addition to that, you do have rising trading volumes, which sort of help to confirm this upward price movement. And then for the week, you were able to close out at these highs, which does suggest that the overall trend structure here does remain a bit more bullish, given the fact that the closing price itself didn't close at these prior lows, coming in right around the sub $20 level. So there are a few factors here at work. And the price movement to the top side has been substantial on a short-term basis. But I do think that it's important for people to sort of keep the broader context in mind here, because I think that it's very easy to start to get excited about small price movements, especially when you start to see drastic price movements in the other direction. So as we can see here, on multiple occasions, we have seen the share price fall below this $20 level, which has been extremely closely watched. And it's definitely a region of psychological significance for this stock. I don't think there's much doubt to that. So when you start to see share prices move in this manner, to see a bit of a relief rally here can be encouraging and things like that. But I think it's also important to sort of to keep the broader context in mind here and understand that the ultimate price movement is really relatively small compared to the broader picture. In addition to that, when we look at the indicator reading and the relative strength index, there are a couple of conflicting signals here that I do think that people should understand. So in the relative strength index reading, that's the purple line at the bottom of the price chart here. We do have the yellow line would be the moving average of the RSI, the relative strength index. So what we have here most recently is an upward break of this downward trend momentum that has been governing share prices now for quite a while. This on its own is a positive development. However, there's a lot going on in this indicator reading here, because one, you're very quickly moving into oversold territory, just as you're also seeing important Fibonacci levels that are forming near term. We did see a little bit of a break here in that respect, but there wasn't significant follow through here from that price point. So even though you do have rising trading volumes here, you're going to need to see some continuation here next week in order for this to be really considered to be a powerful move, and we're not quite there yet. And I don't think that people should be getting ahead of themselves with this stock. So you do have this factor that the trend itself has broken, but you're also very close to moving into overbought territory, even though we're only trading right around 23.50 at the moment. So you have to ask yourself some questions here. What happens if we're in overbought territory at 23.50? I mean, I would have to think that that's a disappointing outcome for some people that are watching this stock. I mean, you don't want to believe that that this current trend movement higher is going to reach maybe possibly a little bit higher, to what, $24 before the stock starts to become overbought. I don't think that's a condition that most people want to see. And then in addition to that, what you do have here is a much more powerful reading on the negative side of the chart, which is a bearish divergence that is starting to form relative to these recent lows. So let's explain what that means, because divergences are one of the strongest, most powerful chart analysis techniques or signals that you will see using this type of approach to trading. So what we have here is a prior price low, which came in at $18.73. As that happened, the indicator reading was hovering right around the 21.40 mark. which was oversold at that point. We did see a bit of a bounce from that event, or from that downtrend movement, which would not be surprising at all. We're oversold at that point, and we had deviated quite far from the exponential moving average structure. So you can't maintain share prices outside of the moving averages for very long. At some point, the stock has to revert to the mean and drift back toward the exponential moving averages. So it was not surprising at all, for a few different reasons, to see share prices move back into this $23 area. However, there we did start to see some fairly strong and significant resistance that started to form, and then ultimately what we saw here was a share price movement down into 1988. So here comes the bearish divergence part. So here you're looking at a share price that's $19.88, and then as that occurs, you're seeing a price movement lower in the relative strength index. So previously you were seeing let's try to get some exact numbers here. Right around 20.6 in the relative strength index. And now here, as you're seeing share prices move to 1988, you're looking at a relative strength index reading that's right around 19. So what you have ultimately then is an indicator reading that's lower relative to this prior movement in share price action. So you're seeing a price movement lower in the indicator reading, but you're not seeing a price movement lower in share prices. Okay, so the indicator takes precedence here. The indicator is more important because this is a leading indicator, and it does suggest that share prices, will ultimately have to move lower, given the fact that there's a bearish divergence condition that's currently forming on the price chart. So you would have needed to have seen the relative strength index post a bit of a higher number here as share prices moved into 1988, and that did not occur. So you can take this with some grain of salt here, because you do also have this trend break to the top side. But for the most part, trend breaks tend to be less important than divergent conditions. I mean, a divergent condition tends to be much more significant. So for these reasons, the overall structure here, I really just think that people need to take a breath and take a step back here before you get too excited, because there are still signals here on this price chart which suggest that this latest move higher is likely unsustainable for very much longer. It doesn't mean that you can't see a bit of a drift higher here next week. I think that you probably can. I think that we can get a little bit more momentum out of this upward price move. But when you take this into consideration with the broader context, there are still negatives here that need to be watched. So here's the current market analysis for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.